Hi Sumayya.
Hi Claire.
How are you?
Very well, thanks. How are you?
I'm well, thanks. Welcome to She Means Business.
Thank you.
So we just want to know a little bit more about your journey. You've been in the corporate space, now you're in entrepreneurship, and we just want to understand what that has looked like. But before we get into the entrepreneurship part, tell us a little bit about your journey. You were in the corporate space for very many years. You succeeded, you climbed up the ladder. Tell us some of the key points in your career that got you to where you are.
Okay, so my background is in law. I studied law and I started working as a lawyer. I did that for a while and I specialized in commercial law. And then the bug hit me that what I wanted to do, rather than recording transactions on behalf of clients, I wanted to be a deal maker. I wanted to be in the transactions myself. And so that started the journey of moving from a private law firm where I was working into the corporate world, where I joined initially as head of legal. And while handling matters as head of legal, I started getting very much involved and interested in the strategy and operational aspects of the business. And so over the years, my docket grew. So beyond legal, I was still head of legal, but I was also given an additional portfolio of strategy. And then I was given an additional portfolio of corporate affairs. So that's, I had quite a broad docket between legal, strategy, and corporate affairs. Eventually, I was promoted to be the deputy MD. And then when an opportunity arose, the then MD's term came to an end. So there was a competitive recruitment process. I applied and was appointed as the MD. So my journey from practicing as a lawyer, getting into management beyond law, into other spheres, started in the oil and gas sector. And that was a very interesting journey. It's extremely competitive because on the one hand, we were dealing with retail sale of petroleum products. So at the petrol stations as well, we had a depot. So we were dealing with bulk sales at the depot. Both those are extremely competitive. We then decided to introduce gas. So we added LPG gas. We built a new LPG depot. We rolled out our own branded gas. And we also got involved in oil exploration. Really, I would say as probably the pioneering indigenous Kenyan entity to get involved in oil exploration. Each of those areas came with their own dynamics, their own challenges, their own opportunities. And I think to a large extent that really gave me an opportunity to grow, because all of them require a lot of human interactions. They require a lot of creation of awareness, whether you're out in the field trying to explain to communities how oil exploration is done, how it will potentially impact positively the community if there is a find, what are some of the challenges, what are the concerns, all the way to engaging with illegal refillers of LPG, and what does that mean from a safety point of view, and what do companies that are focused on compliance, what should they be doing? So it really gave me an opportunity, I would say, to grow across a number of different areas.
Okay, so now you said you wanted to become a deal maker, and you were in corporate law initially, then you moved to strategy, corporate affairs, and so on, and then oil exploration. What are some of the things that you had to do to make sure that you are in tune with what was needed to understand this new sector that you said is very competitive and was also a new sector?
I think one of the fundamental things I would say is having a mind that was open to learn. there was a tremendous amount of learning that needed to be done. This learning was both formal learning in terms of actually attending courses, so that then you understand the detail, the technical details around some of those areas, but as well learning from others. There are other people who had gone ahead in the industry. They had done a lot. They've learned, they've discovered, they have experienced. So that type of peer-to-peer learning I found to be incredibly important as well. Somebody I met at that time said to me something that I thought was very poignant, and she said, learn from everybody. She told me, learn from those who are older than you, learn from those who are younger than you, learn from those in your industry and those outside, and she said, learn from those you like and those you don't like. At the end of the day, just keep an open mind to listen. You don't know what you will pick from the different conversations. And I thought that was a very, very, it was such a tremendous insight for me that has continued really to serve me even now.
Now, you were in that space for a period of how many years now, in the oil and gas sector?
Oil and gas sector in total, I was there for maybe 12 years.
12 years. And then is it at that point that you turned into entrepreneurship, or what was that looking like?
No, not yet. Well, I did a little bit. What I started doing already was transitioning into Islamic finance. I had initially joined the board of the first Sharia-compliant bank in Kenya. And so I served on the board. I was eventually appointed as the vice chair of that board, and I was in the committee dealing with business, investments and finance. That committee was the main committee as far as the operational aspects of the bank with respect to credit approvals, or any issues related to areas around business, investment or finance. And that gave me an opportunity to really understand Islamic banking from the inside, because now you're looking at customer needs, you're looking at customer challenges, you're looking at banking products, you're looking at the details of the compliance and governance required for you to offer products and services, or to curate new products and services. So that really opened my mind to Islamic banking and the opportunities within that. And then from Islamic banking, I got appointed into the board of an Islamic risk management company. Others like to call it Islamic insurance. And so when I joined that board, now that was opening up my journey in Islamic finance even further, because I started dealing with credit initially, and lending and aspects to do with that. And then now I moved into risk management. We had an opportunity where, because I was a governance champion, I'm trained as a governance trainer. I have done a lot of corporate governance training over the years. And there was an exit within the Islamic risk management company. And I was given special duties as a director because I was a governance champion, to help oversee help oversee matters at the company on behalf of the board while they recruited for a new CEO. So I did. But now, coming from an Islamic finance background, coming from a legal background, and coming from a corporate governance background, so while I'm overseeing, you find, oh, okay, no, this needs to be done, this needs to be sorted, this needs to be implemented, this needs to be fixed. So you're overseeing, but this car is moving. You're not parking the car while you're waiting for a new driver. So whatever needs to be done to ensure the car is moving, and it is moving efficiently and reaching its destination, if you're the one helping to keep an eye out at that time, you ensure it's done. And so the board then eventually decided, by the way, we really like what you're doing here. Can we invite you to take over as the CEO? Now, I had to go back to school and now learn about Sharia-compliant risk management. So I went back to study, again, back to keeping an open mind for studying. Fortunately, during my master's, because I had done commercial law in my master's, I had studied insurance. Now, what I was studying now is the Sharia-compliant version of that. And so I ended up running that company for a number of years. And during that journey, what I came to realize is the model of any insurance company, whether it is Sharia compliant or otherwise, is that you have to pool funds. So you're 50,000 and somebody else is 40,000, somebody else is 30. First you have to pool them together and then you need to invest this money. This is how somebody who has paid you 40,000 can have their claim of 1 million paid, because you're pooling and you're investing. And I realized at this time the big shortage there was in Sharia compliant investment opportunities. It was really quite limited. And looking at the requirements and the needs of this company that I was running at that time, you're really also looking at balancing your assets and your liabilities. You can't say, okay, let me invest everything, for instance, in real estate, which you couldn't even from a regulatory point of view anyway. But even if you could, how do you then quickly liquidate that to pay claims when they arise? So obviously that wasn't an option. A lot of the other insurance companies that didn't have the type of Sharia compliant restrictions we had would put money, for instance, in government bonds, in treasury bills. And over this period, we saw very, very high rates being paid to those who had invested there. But for us as a Sharia compliant company, we couldn't invest because what government gives you is interest. Now, as you know, from a Sharia compliant finance point of view, interest is the number one no. So what do you do therefore with that? We had a minimum, we had a requirement from a regulatory point of view that all underwriters had to have some amount of money with the central bank by way of lien. This is security really for your policy holders. And so for us as a Sharia compliant company, the Sharia board, because the Sharia board is completely separate from your other board, they said, if this is the law of the land, then you have an allowance to put the money in lien, but really only the minimum that you must put. And any money that you make from that, i.e. interest, you cannot bring it into the company because interest is haram. Now compare other non-Sharia compliant underwriters taking this interest as other income. It just goes straight to the bottom line. For us, you couldn't do that. So the ruling from the Sharia Council was this money, you can't take it into your profit. And in fact, this money must go out to charitable causes, all of it. And even as it is going out to charity, you cannot take publicity benefit out of it. You can't say, oh, we have helped orphans, we have done educational scholars. You can't, because then you're taking publicity out of money whose essence is not halal. So whatever you do with it is very quiet. So you can imagine, there you actually are not benefiting. Yes, the people receiving the money are benefiting, but for you as the company, it doesn't put you on a level playing field as far as the others are concerned. And this is one of the things we were frequently engaging with the regulator about providing a Sharia compliant option. So therefore, coming back to pooling funds and investing, there was no way I was going to put this money into that same pot just to be told you can't keep any of this money. So what was the alternative? The alternative, other than the few options that were there at that time, like fixed deposits in Sharia compliant banks and a few other options, was to curate own investments, which I started doing. And we started coming up with all sorts of own investments, musharakas, murabahas. All these are Sharia compliant contracts, which are in Islamic finance, the underlying contract is fundamental, because Islamic finance regards that money is not a commodity that you can buy and sell. Money is a tool of trade. And so if somebody is taking money from you, what are they taking the money for? Either they are buying something, it's a contract of sale, or they are leasing something. You see? So it can't just be that I am selling you money and the cost of me selling you money is this. That is interest. and the Sharia will not accept that. So we had to look at what are the different structures we can use to curate investments that are actual projects, they are trades, they are different transactions that are compliant to the Sharia, that are approved by the Sharia board and approved, by the different levels that needed to approve. So we did that with tremendous success. Of course, when we started out initially, because a number of those areas were completely new. Now, my legal background really helped here, because remember, you're putting together things, including the contracts from scratch. And now you're layering on Sharia contracts. And so we started it out, we started piloting, the board was very supportive. And what we were earning compared to what we were able to get at the market at that time was several 100% above what we were getting in the market. And so it was working out very well for us. We were then able to expand what we were doing in that area, but it really made me realize the gap that was there as far as Sharia compliant investments are concerned, and the need to start curating different things that not only institutions but even individuals who want something either Sharia compliant or impact related. Because what you find within the Islamic finance sector, whether it is the bank, whether it was the risk management company, a lot of the clients were non-Muslims, a lot. Of course, because it will mirror the population of Kenya. And you'll find people will come for different reasons. Those who are coming there because it is for Sharia compliant reasons, of course, that is a category. Others will come there because I like your values. And even though the person is not Muslim, your values resonate with my own faith values, I want to be with you. Others will come there because I like your product. Others will come there maybe because of the prices. So it's a whole host of reasons why people would come. But the important issue there was that it was open to all, so long as you understand the basis on which we operate, and this is something that resonates with what you're looking for. And so the entrepreneurial bug in that case was to step into this gap of Sharia compliant investments. And this is one of the things I had said I want to do, that my next step in this Islamic finance journey, because I knew I wanted to remain in Islamic finance. It's a growing market globally. It is a huge part of financial inclusion, and I wanted to be part of that. One of the things I realized and experienced firsthand when I was in the Sharia compliant risk management company with the underwriter is that a lot of the pastoralists in Kenya are Muslims. And pastoralists are disproportionately exposed to the effects of drought. And so entities wanted to come up with different climate resilience solutions for them. And some of these were insurance-related products. But for them, they were like, we are Muslims, we don't take insurance because there are aspects of insurance that are not compliant with the faith. And so being able to come up with a product that addresses the needs of nomadic pastoralists, where you find them when you're going out to do the initial engagement and creating awareness on your product, and where they will be when the claim arises, may be completely different environments. And yet we have structures, we had structures on the ground where you can actually, you have people on the ground essentially following the communities where they are. And for me, that was very, very mind-opening on the ability of corporates, even corporates operating in environments that are extremely regulated, to really put themselves in the shoes of clients that are as marginalized as nomadic pastoralists, and coming up with a product that resonates with them. And so that was also another additional data point to say that it really is important not to focus only on one-size-fits-all solutions, but how can you come up with a variety, diverse offerings that really can enhance financial inclusion. And for me, it was about investment, offering people connections to different Sharia-compliant investment opportunities that resonate with their values, resonate with their faith, and also allow for this expansion of the space for financial inclusion.
You've really broken down for us what Islamic banking and Sharia-compliant products are. And before we continue with that conversation, because I don't want us to lose the trail of thought, there was something you had mentioned about being in a number of boards. Now, have you experienced, because I've heard this with some of the women who have been on the show, they say that they've entered a board, they're serving well, but then there's some biases that they experience as women. People have these expectations that, oh, she doesn't know much, or she will do the lighter duties, so to speak. Is there any bias that you experienced being on boards, and more so because of your faith? I'd like you to take that, and then I'll double down on the issue of Islamic banking and some of the misconceptions that are around that.
Yeah, sure. I mean, that's a great question, and I'll take it from a number of points. The challenges that women face are not limited to boards, of course. Whether you're trying to climb up the corporate ladder, you know, people talk about the glass ceilings. What about the sticky floors? There are all sorts of what do we call them, landmines along the way. Sometimes you feel like you're walking on eggshells, you know. Now, it's interesting you ask about my Islamic faith, because I have a name that isn't very familiar outside of certain, say, circles. And I had a job that required me to do a lot of international travel. So within my circles, within people who have interacted with Muslims, they will know the name. But for other people, if you hear the name Sumayya, you really don't know what gender this is. And here I was running an oil company. Automatically, in a lot of people's minds, it was think manager, think male. The CEO of an oil company must be a man. And I tell you, you would go somewhere, maybe I'm the one speaking at a conference, and somebody would actually be introducing you as Mr. Sumayya. According to them, it could only be a man, you know? Or somebody would come to my own office for a meeting, and the expectation is that they're coming to meet Mr. Sumayya. And so then when I walk in, you can see the shock. Oh, you are, well, yes, you know, I am definitely not Mr. Sumayya. And, you know, when you have a woman somewhere, Claire, what that tends to do, with both, shall I say, deliberately and instinctively, it increases the number of women who apply. All of a sudden, you find the applicants, because people feel, oh, I can, you know, there's somebody who can relate. I can relate. I think there's space for me in this organization. We had a lot of tremendous female employees in the company. And I distinctly remember one meeting that we had where this group of gentlemen came, and you know, the industry can be very serious in the meetings. It's all pinstriped, dark suits. And they walked in and we had our meeting. We had a great meeting. And when we finished, one of the gentlemen, who was much elder, and he pointed out and he said, you know, you're all women. And, oh, you're right, we are all women. You see, for us, we are just here to do our job. And the fact that we were all women in that meeting, I mean, it was neither here nor there. These are the people who needed to be in this meeting. But you do get those type of reactions. And it's interesting, you get them even as you travel internationally. So it's not something that you'll only meet locally. But because I was a corporate governance trainer, and some of the trainings that I had done in corporate governance and as part of other trainings related to entities that had a specific program to help prepare women to be ready for boards. And so I was a trainer for that program. And bringing the women in that you want a board role, we want you to be ready, because guess what? It's not only about the technical competencies you will bring. These are some of the biases you will face. These are some of the behaviors you will meet in there. This is how you need to ensure that you're not only showing up, but that you're speaking up because you need to be heard. And that isn't always an opportunity that is distributed fairly. You know, there's a certain way that the gender bias sometimes can come into play. And if you're not aware of it, it can catch you off guard, where you wonder, but how come other people have an opportunity to speak and this, you know, the talking stick, as it were, doesn't seem to be coming my way. So if you don't understand that, and therefore you prepare yourself to be productive and effective in that type of setting, you may have great ideas, but you will never speak them out because you just don't know how to put your point across in an environment where the other voices are much louder, they are much stronger, people are really supporting, they're almost playing tag team, you know, and you feel you may be the only woman on that board, you know, and not all other members of the board, unfortunately, may have been exposed to an opportunity of actually dealing with women at that level. Some of them actually don't know how to do it. You may go into a board where they are tempted to ask you to serve tea because this is the, you know, for them, the point of relation and connection with you, automatically it goes there. When you are on a board, make sure that the technical skill that took you there is very evident in your engagements. Because if you don't bring it out, then you fall into that stereotype. Maybe these women were just here to tick a 30% box, you know, affirmative action or whatever, rather than you could actually be the expert in that room, but who knows about it? And so for me, my engagement at the board, and particularly because I was a corporate governance trainer and I was a trainer of women on boards, my perspective is when you're going into a board meeting, prepare. Don't be one of those people who you want to go into a board meeting waiting for the management to come and read documents so that you hear what was in that door. There you already, really, you're going to lower your own level because you're not prepared. Or you haven't had an opportunity to engage and interrogate the issues so that if there are other things, there could be things in there you don't understand. It gives you an opportunity to ask before. Or if there are things in there you don't agree with, you know, it gives you an opportunity to think through and reflect. What are some of the alternatives you want to put forth? So going into a board meeting unprepared is one of the things I would really encourage women. Don't do it. Don't do it. You know, we may talk about the challenges of glass ceilings and sticky floors, but don't contribute to your own failure by you not being prepared. Be that one person who has actually really looked and prepared for this board meeting because you've gone through your documents, you've made your own notes, you know the type of questions you want to ask, and you're ready to be a very productive member of that board.
I'd like us to now speak a little bit more about misconceptions around Islamic banking and Sharia compliance, because sometimes those words are thrown around and people have their misconceptions. But what you have explained, what Islamic banking and Sharia compliant products are, what are they not that people think they are?
Okay, so fundamentally, Islamic finance is finance that is based on Islamic values. And sometimes when people hear the word it is based on the Sharia, the translation of Sharia means the way. That's what Sharia means. And we have a Swahili version. It's not far from that. That Sharia, this Sharia, essentially it's about the rules, the practices. Yeah, this is what the Sharia encompasses. So there is the direct translation, which means the way. And essentially what the Sharia is what our Sharia in Kiswahili is. When you want to know Sharia Kenya, you go to the rules, you know, the regulations, and this is what it is, yes? And the Sharia is based on Islamic values which seek to promote fairness, they seek to promote transparency, they seek to promote justice, and they seek to promote growth. And so, if you have gotten into a transaction which the law of the land regards as being perfectly legal, but according to the Sharia, that transaction was inequitable because there was information asymmetry. You, the person in the corporate, for example, had access to more information than your client. And the Sharia may regard that as being unfair and unjust because this person didn't have enough information. Maybe they would have made a different decision. You may find yourself not being allowed to keep any money that you have made out of that transaction because it is deemed to be unjust and unconscionable. There was information asymmetry. The Sharia can say that this contract, this transaction was not transparent. You knew a lot more about what was going on, but you were not transparent about, the dealings. You can't keep any of that money. And so you'll find, because the Sharia is dealing with higher values, there may be things that are perfectly legal in the law of the land that the Sharia will not accept. And so the ethics underlying any Islamic finance transaction is fundamental. And that's why we talk about transparency and justice. And if somebody is borrowing money, for example, and they have gone to a financial institution, by and large, for you to borrow money, it means you have a need. By and large. Yes, there are other people who maybe do their own wealth management through that, but let's talk about those who actually have a need. So somebody has borrowed money, they have paid. If, having paid over 15 years, they are still deemed not to have cleared, you borrowed 10 million, you have paid 15 million, you're still deemed to have another 5.6 million, your house is sold, this money has gone to the financier. Not only have you already paid 15 million, you have lost your house in the process. According to the Sharia, this is completely unjust. You can't do that because this person came to you already when they have a need, right? And so, what are the rules you're putting in place to help satisfy their need? So even if you're doing, you're giving a loan to this person, the conditions of that loan are very, very important according to the Sharia. If you're going to come up with terms that are so unjust enrichment, the Sharia will not accept that. That's not accepted. And so you will find in markets where the Islamic finance can operate under a fully Sharia-compliant mode, if you are borrowing money to buy a house, you and your financier are equally owning that house. They are not giving you money and charging you interest. So you have come maybe with 25% of the purchase price, so that you own 25% of the house. For example, your financier owns 75%. So what you do is that every month you're buying their share. You keep buying off of them a share of their ownership in the house until you finish buying. And so if you come into some funds that allows you to pay them off earlier, then you pay them off earlier. Somebody should not be penalizing you for paying them earlier. Oh no, I had projected that I was going to make X amount of money from you, and so if you pay me earlier, you see? And so the Sharia is very focused on being just and equitable and conscionable and transparent. So this is one of the reasons that interest is completely disallowed. It is regarded as being unjust enrichment. It is unfair, and it puts somebody who was already in a need in an even more difficult position. The Sharia finance, Islamic compliant, Sharia compliant or Islamic finance, the other misconception is that it is for Muslims alone. It is not. It is for anybody who likes the product that is being offered. You like the ethics it is based on, because even when you look at the contracts that are there, you will see some of the things that are being declared there. So if you go to a Sharia compliant risk management company, you will see the form will say you cannot be involved in things that are regarded as being antisocial. So anything to do with gambling, anything to do with alcohol, anything to do with ammunition, we cannot take part in any of that. And this is declared upfront. You won't find those in a lot of other contracts, you see. So things that are regarded as being antisocial against the Sharia, many times it is because it is regarded as being antisocial. So you will find, or things that have negative impact on the community. A lot of these will be upfront declared. The other misconception is that Sharia-compliant institutions or Islamic finance institutions are charitable. They should not make money. Now, there is charity and there is business. And the two can go hand in hand, but it is not to say that you cannot make money because you're saying we are faith-based or we are using Sharia-compliant values. Not at all. Actually, you know, in the holy book of Muslims, the Quran, it is very clear that interest is not allowed, but trade is encouraged, because that is a transaction that is completely understandable. If I sell you this glass and I make money from selling you that glass, that transaction is completely clear. I know what I sold you, you know what you bought, our price, you know, is clear. And so there is no problem. So when you have somebody saying, oh, but why should the Sharia compliant banks be making money? But they are businesses. And businesses, one of the reasons they exist is to make money. And so that is a misconception. Oh, but you know, we thought. There are institutions that are charitable. That is a completely different business model. And this same business, through their CSR, through their community empowerment programs by any other name, through their ESG, will have charitable and welfare objectives. But fundamentally, a business is a business, and businesses do exist to make money. Another misconception, people will say, oh, but why is the pricing not different? Now, this is the choice of the individual institution. How do people price their things? You price your things based on many different parameters, one of which is looking at the market and saying, my strategy is I will not be above the market, but neither do I want to be below the market. This is my strategy. And if that is your strategy, then that is your strategy. Nothing says that if you are Sharia compliant, then you must always be the one who has the lowest price there. It's not necessarily the case. This really comes back to your business strategy. Some business strategies may be that, and even those that are not Sharia compliant may have that strategy, that our strategy, we aim to be lowest priced. Those are there. Others will come with something very different and say, no, actually, we offer a premium product and our pricing reflects the product. So this misconception that you cannot, that your pricing should be seen to be distinctly different purely because you're Sharia compliant, may overlook the fact that any business will have its strategy, including a pricing strategy, and that is what they use, you know, to price the products. Other misconceptions are around women. You know, can women access these products? Do women have access to financial products? Do Muslim women themselves have a right to own assets or, you know, to access? Maybe this is a misconception that is there. And certainly in Islam, right from inheritance, you know, the Islamic rules on inheritance are extremely detailed, extremely. And the share of the woman is as detailed as the share of the man. So it isn't really for some man somewhere to determine whether or not you should inherit. It is so clear who gets what is, in fact, it's preordained, you know, if this, then that, if this, it's very formulaic. So the women have rights to own assets. Women have rights to access finance. Women have rights to own property in their own name. And there is nothing in Islam that prevents a woman from owning assets, property in her own name. Nothing at all. So in the event that that is another misconception, you know, just to clarify that. And maybe the final misconception is just to say, if you're going to look for Sharia compliant finance, fundamentally what is looked at is the business or the purpose of the that money, what you want to do with it, and not the faith of whoever is applying. Which means if a Muslim went to apply for a loan, but they want to do something that is regarded as non-Sharia compliant, they will not get that money. And if a non-Muslim went to apply for a loan, and what they want to do with it has no objection in the Sharia, they will get the money. So fundamentally, it's about what is this money to be used for, rather than looking at, okay, what is the faith of the person.
Okay, I think those are good clarifications just for anyone who didn't understand what it's all about. Now, as we start to conclude, I'd like us to talk a bit about work-life balance or integration. You said during your time in the oil and gas sector, you traveled a lot, and you still do travel a lot. So how did you balance that, especially during the earlier years when it comes to family time, corporate time, and making sure that you are studying to make sure that you're up to date with everything that's happening in the sector? How did you go about that?
I would say I was very fortunate to have a number of experiences, let me say, that were very defining for me in getting a balance. The first one I will say is from my mother. I come from a very fortunate family setup where the girls and the boys had equal opportunities for education. I know not everybody had those type of opportunities in other circles, and I feel extremely blessed that we, the girls in my family, had the same opportunities. Now, my parents were very focused on educating us. They were very focused on us having a value-based outlook. That was extremely important in our house. And my mother was very focused on preparing us for our future roles. And with the benefit of hindsight, looking back now at some of the things she would say and do and insist that we did, I understand how that was really linked to the balance. My mother would say, for instance, we do homework and we cook. She was very keen on that. She said, I don't want a situation where, because you want to study and you're advancing in your studies, you're letting go of this other side. Because she would say to me, now you finish your schooling, you finish primary, you go to high school, from there you go to university, you finish, you get married, you're moving into your own house, you don't know how to do anything. That's not going to happen, she said. It will not happen. And that means we do things concurrently. So she really started preparing us throughout for these roles, that it wasn't a chore. By the time it came time to have to do them in your own house, you had been trained for years and years and years about this, on this. And I realized, as I said, with the benefit of hindsight, just how important that is. Because sometimes you talk to young ladies who have done brilliantly in their education. They have climbed up, now they are doing fantastically in the corporate ladder. It's now time for them to get into family life. Maybe they've settled down and it's a complete culture shock. Because it's like, whoa, what just happened here, I am not ready for, you hear stories like that. And you can understand that maybe the type of background they came from was very focused on their growth in education and career, but maybe wasn't adequately preparing them for other roles, right? Because, in the marriage, everybody will have their role, and those roles need to be prepared for. So that, for me, was very, very defining. The other thing is, very early in my career, I met a very senior lady during one of those international trips, and very senior in that sector. And I was really, pleased and impressed to meet her, and I wanted to learn from her. And so I started talking to her, and I said, I wanted to learn about her journey, and she's at the top. And I said, has it been worth it? And she said to me, no. And I was shocked. I really did not expect that answer. And I said, oh, why? And she said, because I was so focused on my career, climbing up the ladder. By the time, she paused to turn around, the children had grown up and left the house. That was like a bucket of ice cold water on me. And I was like, wow, okay, this is a really important learning of what not to do. You don't need to make all these mistakes yourself. And then the third thing I will say, I worked for a female boss. And you know, we hear all sorts of stories about, oh, how women can be their own worst enemies and this and that and the other. And I don't believe that, Claire. I really don't. I believe that people are people. They are good people, and there are people who are not good, which means they are good men and men who are not good, and good women and women who are not good. I have been fortunate to have worked for some incredible women. I have worked for a really fantastic female boss. And she made it okay to talk about family, because I had just come from working for a male boss, and he was a great male boss technically and professionally. But for him, please, anything which is not work, you leave it at the door, right? And you pick it up on your way out. None of these talk about, no, that did not arise. I remember working, like you work up to the day before you're going for your maternity leave, you know, because you know those days are going to be, you know, reduced from the maternity, and during our time, the days weren't what they are now, right? And it was like, listen, we have a job to do. We do our job, right? Anything else is not linked to the job. And so when I had an opportunity to work for a female boss, and it was okay for her to talk about her children, and oh, you know, there's a school activity, and I was like, wow, you know, you mean it's okay in a professional setting where I'm looking to climb up the ladder? It's not a sign of weakness for me to talk about. That was so empowering. It was incredibly empowering. So when I combined the learnings from my mother, when I combined the feedback from that senior executive that I met, and I combined the approach of this female boss, I realized, you know what? I take all of me to work. I'm not going to split and do. I had somebody saying that they don't manage to go for children's school activities, so they send a video crew to go and record. And you know, so when the children see the video crew, they're like, okay, I know who sent this, you know, because the parent is not there. I said, no. If it is important, let it be on the calendar. My children's plays, sports activity, they are important, and I don't want to delegate. My family, put it on your calendar. And this is what I found, that if it is important to you, it will be on your calendar, or it will be in your wallet. Yes, you know what they say, if you want to know what is important to somebody, you know, look at their calendar and look at their wallet, because where you're spending your time and your money. And I said, then let me be deliberate about it. I don't want this to be an afterthought. I don't want to miss out, because before you know it, your children have grown. You have, and of course before the children, you have a spouse. Are you investing time in this marriage, or are you busy growing two parallel career paths that at some point, you know, they crisscross somewhere, then everybody goes on their path? For me, and I think, you know, this is how I would put it, being very clear on your objective. What is this about for you? So you're growing in your career just to grow in your career, or you're growing in your career because of certain outcomes, certain objectives you're seeking to pursue. And for me, those objectives include my family. My career growth should benefit not only me, my family should benefit from how are they benefiting from me having done 1, 2, 3 things? Or is this just something somebody sees you on a screen somewhere, but they hardly see you? Maybe you are compensating for that by buying them the latest gadgets. And I didn't want to be that mom, you know, to have the gadgets being the one standing in the gap for me. No. I want to be there. I want to be there cheering on the sidelines, making noise if you're on the field, because at the end of the day, these are the memories, right? This is what will matter. And this spouse that you have decided to partner with, how are you investing in each other? You know, if you're only going to be running separate career paths, then where do your paths intersect? And what did that mean practically? It meant that if you find, for me, I found at some point, both of you may be traveling, right? Maybe you're almost playing tag. As one arrives, the other one is leaving. So I said, you know what? We need to be deliberate in looking for opportunities to travel together. So if you're going somewhere, can I take a couple of days off? So for me, leave by and large wasn't about taking one block month. I like to spread my days out over the year, because among other things, I find those breaks, as you go, you take a break, you re-energize, get back into that. I found that very productive for me, and it allows me to be available and to plug into this other family type of engagement. So if I find my spouse and myself, our schedules are, everybody's running their own. If I manage to take a few days off and he's traveling for work and I can tag along, see, you've made a deliberate step to spend some time together. Maybe I'm discovering a new place and he won't be working throughout. When he's not working, we are spending time together, and vice versa. Sometimes I'll be the one to say, hey, I have a work trip coming up here. Why don't you take time off work and come? So being deliberate to look for opportunities to spend quality time together, I found is really, really, really important. And that could be many things. You know, people do hobbies together. You can actually come up with a new hobby. Maybe you weren't doing it before, but again, it gives you that opportunity. Because Claire, the kids grow up and they leave the house. Then now you start looking at this stranger, trying to figure out what to talk about, right? It's so important to start, you know, what's our thing? Maybe our thing is going to Karura. You know, you have your 5, 10, 15 kilometers, whatever it is. Maybe our thing is taking up whatever, you know, farming, pottery, whatever it is that strikes your fancy, that allows for quality time. The other thing that I found to be extremely useful is really leaning into your support networks. So when I was traveling, and if my husband was away at that time, I really wanted to have family around with the children. And the family was purely for them to feel that they had family with them. It wasn't really to do any of the work, because then you have your support in the house. But it's just being able to lean into, you know, those networks and say, I'll be away for 1 or 2 days. Do you mind coming to spend the night? I just want the children to see that there's still family in the house. I leaned into that, and I found, again, I was very blessed that I could actually go to an auntie and say, please come, excuse me, please come and, you know, spend the night or 2 days with the children while I'm away. And the children really appreciated that. So being able to lean into your support networks, whatever kind they may be, I find is incredibly important. For myself, I decided that part of me seeking balance is looking at where is my time and energy needed and where can I delegate. Because at work we talk about people, processes, systems. And I decided in my house it is people, processes, systems. I don't need to do certain things myself, Claire. I don't. Me being up early on a Saturday morning to go to Marikiti to choose the perfect tomato, I decided it is not where my area of best effort and endeavor should be. You know, it's just not really where I felt my time was needed. There are people who know how to choose tomatoes. Let them do it. Yes. Let me spend that time with the family. So this is what I decided. Trying to be super mom by doing every single thing myself. No. I actually wrote a list. What obligations do I owe to who? Including myself. I put myself on that. Everybody, Claire, including my God, you know. What should I? And then now, this is what my landscape looks like. Okay, how do I make this work? Because otherwise, you can really try and be super mommy, trying to do everything. You collapse, Claire. Where are you on that list? Yeah, you owe it to yourself. I like the statement they say in the play that put on your own mask first before attempting to help others. And I think self-care behooves us to put our own mask on first. And so for me, these are some of the things that have worked. Of course, some of them are still work in progress, but finding the things that give me joy, finding the things that help me to excel. I know the things that if I'm really tired after a long day, if I do this, you know, it's really important to have self-awareness to understand. I equally know when I am not at my best. If this hasn't happened, then I know I will not be performing at the level that I would rather be performing. And I need to know that as well, so that I know what do I need to avoid, what do I need to work more on. And back to that issue of the circle, do you have like-minded, a circle of like-minded people that you can decompress with? You know, every once in a while you just need to do that. And maybe you're out with the girls, you've gone out, you've had lunch, you've had coffee, you had a nice laugh. It's important to be able to decompress.
Yeah, I absolutely love those tips. And as we come to a close, I'd like you to look into the camera and speak to that woman who is trying to grow up the career ladder, or is trying to balance her work and her personal life. What is that one piece of advice that you'd like to leave with her?
Okay, great. So the one piece of advice I would like to leave for you, my dear sister, looking to climb up the corporate ladder, because it can get really tough out there, and people's journeys are different and people's circumstances are different. There are all sorts of battles sometimes along the way. You know, you earn your scars on the way to the top. It's not always an easy journey for everybody. But the one piece of advice I would want to share, regardless of what your journey is, be kind. Be kind. You may find yourself along that journey so engaged and embroiled in your quest to achieve and get to whatever objective you're looking for, that in the process you have left a lot of broken glass along the way. You have injured a lot of people. You have hurt so many people. Maybe it is a word that you said that was like an arrow to somebody's heart. Maybe it is a way in which you dealt with a situation. It may have been a tough situation, but you could have dealt with it empathetically. And I have found along the way, be kind. People have different journeys that they are going through, and the way you engage or treat somebody may be the difference between giving them hope in their own journey or destroying them completely. And it is so fundamentally important to be kind, because at the end of the day, people really do remember how you made them feel. This would be the one piece of advice.
You've heard it from Sumayya Hassan. So in addition to being good at what you do, be kind. Be kind to everyone around you, because you don't know what impact you're leaving. This has been She Means Business. I have been your host, Claire Munde. Until next time, have a good one.